Have you ever seen this happen? A company comes out with incredible news, they're crushing all their goals, and then you look at their stock, and it's just plummeting. It's a real head-scratcher, one of the most confusing things you'll see in the market. Well, today we're going to unravel the mystery behind a perfect example of this, a company called IQVIA.
All right, so here's how we're going to tackle this. First, we need to get a handle on what IQVIA actually is. Then we'll dive right into this bizarre beat and drop phenomenon. After that, we'll lay out the big arguments for and against the company, the bull versus the bear case. And finally, we'll ask the big question, could this whole mess actually be a hidden opportunity?
So, before we get into all the market drama, we've got to meet the main character in our story. Just who or what is IQVIA? Okay, so at its core, IQVIA is something called a contract research organization, or CRO for short. You can think of it like this. Getting a new drug to market is this incredibly long, ridiculously expensive, and super complicated journey. Drug companies hire IQVIA to basically manage that whole process for them, from running the clinical trials to crunching all the data. They're the experts for hire.
And this quote is probably the best way to think about their business model. You know, back in the gold rush, you could take a huge risk and bet on one person finding a gold mine. Or you could be the one selling the picks and shovels to everybody. That's IQVIA. They're selling the essential tools and services to the entire pharmaceutical industry. It's a way to bet on the whole drug boom, not just one single drug.
Now this is where it gets really interesting. Yeah, about half their money comes from running those R&D trials, the shovels part. But look at that other massive piece of the pie. 40% from technology and analytics. This is their secret sauce. IQVIA isn't just a service company, it's a gigantic healthcare data company. They have this treasure trove of data that helps their clients develop drugs faster and smarter.
Okay, so we've established IQVIA is a pretty big deal in the healthcare space. And that brings us right to the heart of our mystery, which all started when they released their latest earnings report. So on February 5th, 2026, the numbers for the end of 2025 come out. And I mean, look at this. By every single measure, they absolutely knocked it out of the park. More revenue than expected, more profit than expected, a home run. Just a textbook, fantastic quarter.
You'd think the stock would soar, right? Well, that's not what happened. Not even close. The moment this great news came out, the stock got absolutely hammered. It dropped almost 10%, falling from over $200 a share down to about $181. Good news literally led to a bad day on the market. And this is the question that just sent investors reeling. If a stellar quarter isn't enough, what in the world could possibly be going on? Let's dig in.
To really get what happened, you have to look past those great results from last quarter. The answer is all about what investors are afraid is coming next. It's that classic Wall Street tug-of-war between the bulls and the bears.
Okay, here's the smoking gun. The market wasn't reacting to the past, it was reacting to the future. Buried in that glowing report was the company's forecast for 2026, and it was just a little bit weaker than people wanted. And why? Because they're expecting to pay about $80 million more in interest on their debt this year.
And that one detail shines a huge spotlight on the big worry, the bear case. IQVIA has a lot of debt. This number here shows that its debt is well over twice the size of its equity. When interest rates are high, that debt gets more expensive, and it can start to eat away at your profits. That's the risk that freaked everybody out.
But then, the bull case comes roaring back with this number. An absolutely massive, record-breaking $32.7 billion backlog. That's work they have already signed contracts for, just waiting to be done. It gives them this incredible visibility into how much money is going to be coming in the door for years to come.
This slide really lays out the two competing narratives perfectly. The bulls are looking at that huge backlog, the massive tailwind from all the new obesity drug trials, and how they're using AI to get ahead. The bears? They're laser-focused on that high debt, a change in leadership with a new CFO coming in, and some accounting complexities that can sometimes make it tricky to see the real growth rate. So you've got this short-term fear on one side and this long-term strength on the other. So who's right? Well, this is a great time to see what the professional analysts, the people who do this for a living, have to say.
And they are not mincing words. This quote really sums up the general feeling. Opportunistic buy. They're basically saying the market had a massive overreaction. Investors got so hung up on a temporary interest rate problem that they completely missed the bigger picture of a super strong core business.
And this chart is pretty much their Exhibit A. It's a simple valuation check. And what it shows is that after that big price drop, IQVIA stock is now trading at a huge discount compared to its competitors and the industry as a whole. In simple terms, it looks like it's on sale.
In fact, when you average out all the price targets from Wall Street analysts, they see the stock having to climb almost 46% just to get back to what they consider its fair price. That's a pretty significant potential upside.
Which really leaves us with this one big question. Did the market just have a knee-jerk reaction to a short-term headline about interest rates? And in doing so, did it accidentally create a rare opportunity to invest in a company that's pretty much at the center of the future of medicine? That is the multi-billion-dollar question here.
Now, we have to end by making it very clear that this discussion is for informational purposes only. It is not financial advice. We always encourage you to do your own thorough research before making any investment decisions.